So let's begin RTP paper 3 advanced auditing for May 24. Half an hour before exam, if possible, try to watch this video just half an hour before exam, because in RTP we generally find extreme questions. So here I'm solving only MCQs and star questions, not all the descriptive questions. Whatever the questions I feel they were little different, only those questions. Rest all other questions you might have practiced already. Now look at these MCQs. So generally RTP itself means the way questions will be asked is extremely different from the routine perspective. Okay, so the same way the questions are also designed. You see integrated case study 1, so lengthy case study, but the questions are quite easy. Only a clear conceptual understanding is required. Fine, without any delay, let's begin. Mr. Ayush, the proprietor of BCD & Co. Chartered Accountants, was appointed to audit financial statements of Amrita Industries Private Limited for the year 2022-23. Okay, BCD & Co. Amrita Limited Auditor. These financials were prepared in accordance with the Dutch GAAP. By the way, this is a private company, remember that. So it's a Dutch GAAP, and the terms and conditions specified in the contract between Amrita Private Limited and Dutch Industries BV, which is also private limited in Dutch. Okay. One of the terms and conditions of the contract was to get financial statements audited from independent auditor. Okay, so the financial statements were prepared as per terms and conditions specified in the contract, which means these financials are called as special purpose financial statements. Next, the contract also stipulated auditors to take into account misstatements of 5,000 euros or more while framing their report. Okay, so the contract has told all the misstatements which are of 5,000 or more you can consider for reporting differences. We'll see that. We'll interpret what is that 5,000 euros. We'll interpret later. Now, any misstatements identified below this threshold did not require any correction or adjustment in terms of stipulation in the contract. So as per the contract, any mistake below this level does not require any mistake. While planning the audit team had also determined performance materiality at 10,000 euros and overall materiality as 2 lakh euros. Okay, overall materiality 2 lakh euros, performance materiality 10,000 euros. So probably I think this might be a printing mistake. It's actually 1 lakh euros. It could have been 1 lakh euros because no, between overall materiality, performance materiality, the gap generally is not more than 50%. Here if you see it is more than 90% appears, I think some mistake. And this 5,000 rupees is called as reporting differences, also called as triviality materiality level. Triviality level we call it as. Okay, like those of you who watched my part 2 CA final advanced auditing marathon, inside the 320 SES timestamp is there. Inside that I clearly told what are the levels of materiality, all that. The following is so I strongly feel this is a mistake. I strongly feel performance materiality and overall materiality, the gap is too much, more than approx 90%. That's not correct. Fine. The following information extracted from general purpose financials of Amrita. Remember the above information what we have seen is the financials which are prepared as per Dutch GAAP, which are special purpose financials of Amrita Industry Private Limited, that are prepared in euros. And the following are the general purpose information in accordance with the Companies Act. So they have given turnover, borrowings, and capital. So something related to this, either audit committee applicability, internal audit applicability, something they're testing. Audit committee we don't have in the syllabus right now. Getting it? Internal audit applicability. So probably the only thing that we have in our syllabus where turnover, borrowings, capital limits were seen is internal audit applicability, section 138 of Companies Act. Next. The borrowings from banks consisted of working capital credit facilities only. The company had been enjoying such credit facilities with a sanctioned amount of 75 crore. Okay, the credit facilities were enhanced to 100 crore at the beginning of 22-23. Okay, so originally 75 crore, now the limit is increased to 100. Outstanding balance in the above credit facilities never crossed sanction limit at any time. It's good actually. If it is not crossing sanction limit, it is not out of order, which means it's not an NPA. Mr. Shubham, a partner of PB and Associates, Chartered Accountants firm, was appointed as engagement partner of audit of general purpose financial statements of Amrita Private Limited for 22-23. So now we are discussing general purpose audit of Amrita Private Limited. The auditor is Shubham, partner. He is the engagement partner. Before finalizing audit plan, BB and Associates asked for internal audit reports. It's common using the work of internal auditor. However, management informed him that there is no internal audit team or function. That's something wrong. The company, a private limited company, internal audit is applicable if turnover is 200 crore or more in the preceding financial year, or borrowings, aggregate of the borrowings are 100 crore or more at any time during the preceding financial year. If any one condition is satisfied, internal audit function is compulsory for that private limited. Here previous year turnover is 250 crores. Still, the company did not have internal audit department, which means it's a violation of section 138 of the Companies Act. During the course of audit of general purpose financials, Mr. Anand, an audit executive, performed risk assessment process, test of controls and substantive procedures. So he did risk assessments, further audit procedures. He performed a trend analysis to compare the purchase of raw materials various months. So he also did analytical procedure. He performed purchase, production, sales cycle analysis to understand inventory holding. This is also analytical procedure. Besides going through company internal control manuals and visiting the company plant, before visiting the plant, before going with the manuals, first inquiries are made with the company's personnel information system staff to provide information about control failures. Diligent inquiries were also made from company's marketing people regarding contract arrangements with customers. Inquiries are also made from company's internal counsel, and communications were also made with company external counsel for sending letter of inquiry. Okay. So this is probably with respect to some pending litigations and claims. A letter of inquiry, external, internal. So you will come across this in 501. SA 501. While issuing the report, BCD & Co. inserted another matter paragraph in the audit report specifying the use of special purpose financial reporting framework for preparing and presenting financial statements. Remember, this is an audit report on special purpose financial statements. When you are giving audit report on special purpose financials, in the special purpose financial statements, what is the framework they followed? What is the basis of accounting? We call it as basis of accounting. When I'm explaining 800 in revision marathon or even in the regular class, I clearly told you the basis of accounting must be described in financial statements, those special purpose. That basis of accounting must be highlighted by the auditor in emphasis of matter paragraph. Here they have highlighted another matter paragraph, which is not correct. On the other hand, BB Associate decided to issue an adverse opinion on the financial statement except for cash flow statement and unmodified opinion on cash flow statement. Okay, so whereas on general purpose financial statements where BB and Associates are the auditors, they want to give an adverse opinion on entire financials except cash flow. Remember 705. Read with 805. In 805, I clearly highlighted this point, but in 705 also, in the marathon also, I've covered this point. If an auditor who is doing an audit of complete set of financial statements, on that if at all auditor is providing an audit report where it contains adverse opinion or disclaimer of opinion, there should not be unmodified opinion on a single financial statement or a specific element or account of the same financial statements on which you are giving this audit report. In a single audit report, if you are giving adverse opinion on a single financial statement or a specific element or account of the financial statement, there should not be an unmodified opinion. It's prohibited. So here, auditor want to give an adverse opinion on the entire financials, but on a single financial statement called cash flow, he want to give unqualified opinion, which is not permitted. As per BB Associates, the cash flow statement was prepared as per required method, and hence it reflects the appropriate figures. Over case study. On the basis of the above mentioned facts, you are required to answer the following MCQs. The audit team of BCD & Co. were not sure which materiality to choose to evaluate the effect of identified misstatements on the audit and of uncorrected misstatements, if any, on the financials in order to form an opinion and to conclude as to whether the auditor has obtained reasonable assurance whether the financial statements as whole are free from material misstatement, whether due to fraud or error. You are required to guide the audit team by selecting appropriate option from below. Fine, we'll see the options. So they just want to know whether materiality, whatever they are following, is it correct or not. Tell me, materiality as per the terms of conditions, what they said, 5,000 euros and above has to be considered. If it is below that, they can be ignored. In case of special purpose financial statements, management may agree with intended users on a threshold below which misstatements identified in audit will not be corrected or otherwise adjusted. The existence of such a threshold does not relieve the auditor from requirement to determine materiality in 320 for the purpose of planning. Absolutely right. Absolutely right. In our book, you open SA 800 specialized areas chapter, some question number 3, inside that below some B point or C point, some examples we have given. Inside that, this point exactly is there. So when you're doing audit of special purpose financials, the materiality is primarily decided by the users. But that doesn't mean SA 320 requirements you are exempted. You also apply SA 320, whatever here SA 320 says, whatever guidelines SA 320 says, all those guidelines we also apply. Getting it? Whereas here in special purpose financials, management may agree with the intended users on a threshold below which misstatements will not be corrected. The existence of threshold is sufficient to comply with the requirement as per 320. No, the threshold is not a substitute for materiality. Getting it? The threshold can be there. The materiality can be given by the intended user, but still we should apply SA 320 principles, especially revision of materiality, all that. In case of special purpose financials, you see, however, the auditor needs to follow threshold provided as per the contract and should be considered as a performance materiality. That's wrong. That's wrong. Here you see 5,000 euros, the contract says below which no need to correct mistakes. Only 5,000 euros and above we will correct. 10,000 euros and 2 lakhs is overall material performance materiality. Auditor have decided. That is absolutely correct. Auditor is right in his approach. So I think remaining options I'm not reading. So straight away the answer is A. Mr. Manish, the audit manager of BCD&Co, objected to an insertion of other matter paragraph in the audit report. Obviously, according to him, there is no such requirement to insert other matter paragraph to disclose such use. No. His objection is right. It is not other matter paragraph. But there is a requirement to include this in emphasis of matter paragraph. So we'll see where the emphasis of matter paragraph is there. So no, emphasis word is not there. Avoid misunderstanding. Adding and other matter paragraph will result in duplication. No. The auditor may consider the audit matter. No. The auditor report on, yes, I think. The auditor's report on special purpose financials shall include an emphasis of matter paragraph alerting the users of the audit report that the financials are prepared in accordance with special purpose framework, that they may not be suitable for another purpose. This is absolutely right. D. Next. Mr. Chitrang, the audit manager at BB Associates, is seeking your guidance in drafting separate opinion on the cash flow statement and other financial statements. Okay. So is seeking your guidance on drafting separate opinion on? No, it is not possible. Guide the audit manager. When auditor considered necessary to express an adverse opinion as a whole, the auditor report shall not include an unmodified opinion with respect to same financial reporting framework on a single financial statement or a specific element, or absolutely right. The answer is straight away A. So it's clearly given in SA 705. What is remaining? The expression of disclaimer. In this case, the auditor has a disclaimer. That's wrong. The expression of unmodified financial, no. An adverse opinion disclaimer to specific item. So that's it. I think this is correct. I already told you the reason when I'm explaining the question itself. 705 exactly. Even in our book also, smart notes, if at all you followed, it is highlighted in a box in 705. Getting it? In our main material also, it is highlighted in a box in 705. Even in 805, I covered this point. 805 also I covered this point. Suppose, if at all, company is asking you to give a separate audit report on cash flow statement as part of 805 audit of single financial statement, and already main financials, complete set, their adverse opinion is given. But on a separate financial statement, can I give an unqualified opinion? Yes, you can give if it is not a major item. And the applicable financial reporting framework does not prohibit this. And law and regulation does not prohibit this. You can absolutely. Next. A company has violated provisions of Companies Act by not appointing internal auditor. Which of the following statement is likely to be the correct reason necessitating appointment of internal auditor for matters relating to? Okay, so which of the following is the right reason why company failed to comply with internal auditor? The company was required to appoint internal auditor during the year 2023 as it fulfilled condition relating to turnover during 2021-22. Such an internal auditor may have been either an individual or a partnership firm only. That's wrong. Under Companies Act, internal auditor can be any individual, partnership firm, body corporate. Anybody can be an internal auditor. He can be an employee or not an employee. Anybody can be. So this is wrong. This is wrong. The company was required to appoint internal auditor for 22-23 as it fulfilled all the conditions of turnover, borrowings, paid up capital during 22-23. That's wrong. Any one criteria, that too in the preceding financial year, if it is satisfied enough. It's a private limited company. Turnover criteria, borrowing criteria only applicable. Any two criteria. Turnover 200 crore or more, borrowing 100 crore or more in the preceding financial year. Any one if it is satisfied enough. The company was required to appoint internal auditor during the year 22-23 as it fulfilled a necessary condition relating to turnover during the 21-22. Correct? Such an internal auditor may have been, remember, borrowings criteria not fulfilled. Borrowings is 75 crore only. Such an internal auditor may have been either an individual or a partnership or a body corporate. That's it. Answer is C. Getting it? That's it. D 22-22. No, that's wrong. So say, for 22-23, 21-22 is the criteria. Mr. Anand, an audit executive, has performed various procedures during the course of audit. Which of the following procedure is not likely to be considered as risk assessment procedure? Which of the following is not a risk assessment procedure? Performing trend analysis, analytical processes is part of risk assessment. Inquiring of marketing personnel with in-house legal counsel, it's a risk assessment. Communication with company legal counsel by sending letter of inquiry, this is not a risk assessment. Inquiries made within the company information system regarding control failures, C, this is not risk assessment. This is further audit procedures under SA 501. For pending litigations and claims, if you have any queries, you can ask external legal counsel and get a confirmation from external legal counsel. That's an SA 501. Getting it? To obtain sufficient appropriate evidence regarding completeness of disclosures of litigations and claims involving the entity. Next, independent MCQs. I hope you're not feeling fast. If at all, please reduce the speed. All these days you're increasing the YouTube watch speed. No, reduce the speed. If at all you feel I'm talking little fast, because I want to quickly finish this. I want to save your time. Safe Health Limited, but in spite I'm talking very fast, but I'm clearly explaining you the things. Safe Health Limited is a company working in field of health insurance sector. It is now using a claim management system where incoming claims can be immediately identified. It's an insurance company, ma, on website itself. Okay, so like simple, ma, suppose I took a vehicle insurance, suddenly my vehicle met with a small accident, so I want to claim, I want to lodge a claim for the vehicle repair. So I opened the website of the insurance company, I uploaded the photos of the vehicle, all that. So the website, now we'll see, a form is issued to the customer who signs it. Okay, the details are verified by the system against the data present in it. Okay, system is verifying. Such system has allowed faster processing of claims, error-free data validation, and increased customer satisfaction. In respect of situation regarding working of insurance company in health insurance, okay, here it is health insurance. Which are the following technologies they are using? It's a robotic process of automation. It's a directly what? It's a robotic process automation. It's a digital audit question. Robotic process automation, we call it as. It's not Power BI, data analytics, Internet of Things. It's robotic process automation. That's it. Next. Today, you see, you want to generate a bank statement. You just type, WhatsApp. Suppose you're a HDFC bank customer. HDFC is some, WhatsApp, they have a channel. Inside that, you send your mobile number. They'll give you buttons. You just select bank statement. You just select the period. Automatically, bank statement will be generated. It's all robotic process automation. Next. Bansal Arora & Co., a chartered accountants firm, is currently performing an audit of Wool Limited, a sizable manufacturing company. Okay. Banvesh Bansal, an experienced audit engagement partner, holds the responsibility for ensuring that audit aligns with the professional standard, adheres to regulatory requirements, and complies with legal obligations. Yes, obviously, 220 requirement. His duties encompassments cover the overall supervision, direction, and the final issuance of the audit report. Correct. While conducting the audit, engagement team encounters a complex issue pertaining to valuation of company inventory. When there is a complex issue or contentious issue, consultation should take place with the engagement partner, or maybe inside or outside the firm, consultation should take place. Within the team, there are differences of opinion on how to address this matter, resulting in contentious situation, means complex situation. What is Mr. Banvesh? Okay, Bavesh responsibility. Mr. Bavesh shall adhere to firm's policy only for addressing an insolvency. No. Mr. Bavesh should secure management representatives. No. Mr. Bavesh should ensure that appropriate consultation occurs within the engagement team first to resolve the differences if necessary. If necessary, with individuals at appropriate levels within and outside the firm to resolve the difference. I think this answer is correct. Mr. Bavesh should communicate the issue to the client management for resolution. No. C is option correct. Alexa Private Limited has been operating in India for past 15 years with the 3 group companies, 1 subsidiary in India and 2 Singapore, 2 companies which are Singapore and Germany. So total 3 subsidiaries, 2 are outside India, 1 is in India. But whatever it is, consolidation should be done. The acquisition of these subsidiaries were gradual with control obtained after. So initially they made an investment, then control is obtained. The statutory audits have determined that all group companies are significant for audit of consolidated financials for the year ending March 31, 2023. So it's a group audit question. The audited financials of all components are available except German company whose audit has been delayed and won't be completed before the release of consolidated. So when you're doing audit of consolidated financials, when you're giving audit report on consolidated financials, if one of the subsidiary company related, which is material subsidiary, if that audit report is not available, then what? The financial statements of German company for the consolidation of audit, what is the possibility? So because of this non-availability of German subsidiary, what is the possibility? We'll see. Since the audit of German companies in progress, its financial statement subject to audit can be considered by auditor of the parent company. Audited and single signed financials can be provided to auditor even after the release. That's wrong. If auditor does not receive audited financials of the German company, he should modify his opinion. Absolutely right. We'll see the next option also. The management should provide management accounts to the auditors of CFS, and auditor can mention this point. That's wrong. Auditor should exclude the financial statements of German. No, that's also wrong. So a material subsidiary related financial statements information is not available now because audit report is not available. So I don't know whether German financial statements component German financial information of the component German financial information which is included in consolidated financials is it true and fair or not. We are not having any idea. So we will give modified opinion. We give disclaimer of opinion because it's a material subsidiary generally. But here they didn't use the word. They just said modify the opinion. So answer is B. That's it. You please check with the answers. 99% I'm sure these answers are correct. Next. So descriptive questions from the last will come back. Yes. So 17. Internal audit. CS Anjana has recently joined as chief internal auditor. I told you all the descriptive questions I'm not reading. Only key descriptive where I felt little new. So just a minute. CS Sanjana has recently joined as Chief Internal Auditor of Upscale Limited, a listed company. Okay. Her subordinate staff in Internal Audit Department brings to her knowledge many prior audit issues highlighted in the previous Internal Audit report, which are still open. Does she have any responsibility in this regard? How she should proceed? Absolutely. Whether you are a stat auditor or internal auditor, if at all in the previous year financial statements audit or internal auditor previous year audit, if at all there are any issues that you have informed to the management, getting it. There is something called action taken report. In reality, we use this word ATR report. We call it as AT report, action taken report. So whatever the issues we give, we should follow what action the company has taken. So there's a responsibility for the internal auditor, even for external auditor, to evaluate, to check what actions they have taken on the issues that we communicated. So that point, action taken report. So that is what used. Please go and read the answer once. Give a single reading. If at all this question comes in exam, you can't answer with whatever the knowledge you have unless you read this answer. Next. Then another important question, most important in this entire RTP, I felt this one. PDSJ associates or stat auditors of a commercial bank for the year 23-24. Okay. While evaluating internal control over advances, it came to their notice that classification of term loan borrower accounts into SMS, special mention accounts, as well as NPA, non-performing asset, is done in the system on the following lines. Okay, in the system they implemented some softwares, how a software classify SMA, NPA like this. In case false due, in case full dues are not received on a particular due date, a borrower account is immediately considered as overdue on the very next day. Actually, logically, this is correct only. Logically. But you know what banks generally do? They do day-end process. There is something called day-end process. Suppose here, for example, you see here, for example, if the due date of a loan account is 31st March 2023 and dues are not received on 31st March, it shall be considered as overdue on 1st April. No. It shall be considered as overdue after completion of day end process. After completion of day end process. For example, like 31st March morning, 10 o'clock, my EMI will be deducted in my bank account. For example, suppose at 10 o'clock I don't have a bank balance. System will once again apply to debit, try to apply debit in my account once it find balance within 4 o'clock. Suppose in the meantime, between 10 to 4, if I transfer sufficient money to repay the EMI, system will debit this money. Getting the point? If not on the day, at least on the next day it will debit. Getting it? So, but once suppose 31st March, until evening I didn't transfer any money. So system is trying to debit, but it's not debiting. 4 o'clock, bank, no, it will process day in. Default will be reported. When the default is reported on the same day, at the end of the day, default on the same day, after completion of the working time, getting it, after completion of the trials, whatever the debit trials which bank software tried, getting it, if it is unsuccessful, then at the day end, the bank software will report it as a overdue on the day end itself. Getting it? That's what happens in reality. On the day end itself, it will be turning into overdue. And we all know, if an account is overdue for more than 30 days, it's a SMA 1. If it's overdue for 30 to 60 days, it's an SMA 2. If it's overdue between 60 to 90, less than 90, it is SMA 3. The moment it crosses 90, it's an NPA. Yes or no? Now here what they are saying, here the bank is considering overdue on 1st April for 31st March. That's wrong. 31st March, on the 31st March itself, after completion of day end processes. After completion of day end process, on the same day overdue must be done. If it continues to remain overdue, then the account is tagged as SMA 1 on 1st May. That is also wrong because you are classifying overdue on 1st April, right? So 1st April to 30th April, SMA 1. So from 1st April to 30th April, so 30 days, if it is overdue for more than 30 days, it is SMA 1. Overdue for more than 60 days, it is SMA 2. And straight away, NPA. So then the account is tagged as SMA 1 on 1st May. Getting it? So I think first day to this one, SMA 012, I think it's called as actually special mention account 012. Some numbering is there. Getting it? But this in-depth discussion is not given in the audit of assets and audit of liabilities in our ICS study material also. So that's why I consider this is a very important question. So first way, actually SMA 1 classification must happen when 30th April because the overdue was should be classified as per RBI rules on the 31st March itself. And if it continues to remain overdue, then this account is tagged as SMA 2 on 31st May. No. It should be tagged on 30th May itself. So 1 day late everywhere. If it continues to remain overdue even after being tagged as SMA 2, the classification, this should be done on 29th June. It should be done, NPA. Evaluate the above control designed by the bank in the system for the purpose of exercising control over advances in the completion in compliance to regulatory guidelines. Please read the relevant answer. If at all this question comes, we don't know. Nobody can answer without reading this question. Next. Then Star Limited has outsourced its payroll processing function to a service organization, Little Solutions Private Limited. Okay. So Star Limited is the user entity. Little Solution is the service organization. Little Solutions Private Limited is responsible for accurate preparation of payroll and timely remittance of statutory dues to the government authorities on behalf of the company. Little Solutions Private Limited controls related to timely remittance of payroll to government authorities are relevant to the company, as late remittances could result in interest and penalties resulting in liability, obviously. So it's a material item for Star Limited. The auditors of Star Limited, nothing but user auditors. Getting it, want to be sure about description, design and operating effectiveness of controls. The auditor want to know about operating effectiveness, which means type 2 report they are looking for. So at Little Solutions throughout the year, in this regard, they require an assurance report from the auditors of Little Solutions. Auditors of Little Solutions means what? Service auditor. Fine. Why the auditor of Star Limited require an assurance report from the auditors? Which engagement and quality control standard cast such a responsibility upon the auditor? 402. Auditor of Star Limited has to check the design, description, design and operating effectiveness of control. Description of system, whatever control is designed and implemented, is the same described, whether the control is designed as per control objectives and operating effectively. Getting it? So we need to get this assurance, especially related to a significant class of transaction or balance that is outsourced to a service organization. In that case, auditor want to get assurance. Which type of report should be provided by auditor of Little Solution? Justify, because Star Limited auditor want to know operating effectiveness of design, description and operating effectiveness of control throughout the period. Type 2 report is required. State the matters on which opinion is to be provided by auditors of Little Solutions. The auditors of Little Solutions means service auditor in type 2 report should talk about description of system, should talk about whether design of system as per control objective, should talk about control, operating effectiveness of controls at service organization. So 3 things mainly they need to talk about. That's it. So read this answer once. Next. Brown Enterprises Limited has huge funds locked up in the trade receivables standing at around 100 crore as of 31st December 2023. Okay. The management of the company want to evaluate validity of the trade receivable to ensure reliability of financial reporting at the year end. The accounts department has provided list of trade receivables to the management containing about 100 names and their balances and contact communication details spread in different parts of the country. The company management requested CA Karuna to take up this assignment and prepare a report for the management in accordance with professional standard. Obviously 4400 agreed upon procedures. Yes or no? Despite not being stat auditor, she decided to accept by explaining the nature of engagement, discuss whether it is appropriate. Yes, obviously it's an agreed upon process, she can accept it. While reporting, what precautions she should take in the agreed upon process report you give, right? Inside that you need to make such a statement. This is not a review, this is not an audit. If at all we conducted audit or review, we would have given opinion, we would have given much more information. So this is only useful for so and so purpose of the management. This report cannot be used by others. Like this, you need to give some statements in agreed upon procedure reporting requirement. That's it. Read the answer. You are appointed a stat auditor of Supreme Limited and are in mid of conducting annual audit of financial year ending 31st March 2023. During the course of audit, you came across a situation involving recording of purchases of 1.5 crore from a company incorporated on 18th March 2023. Okay, so 18th March company incorporated, immediately 1.5 crore purchase we recorded. Upon further inquiry, you discovered that purchase have been booked at instance of one of the director. Further, despite this entry in book, no payment was made and there is lack of documentary and other evidence regarding the purported purchase. How would you deal? This is a fraud. Yes or no? So when you identify a fraud, SA 330, getting it? SA 330 response to assessed risk, especially when the auditor has identified a fraud. Under 240, auditor has to perform further audit process, check whether is there any legal obligation for him to communicate this fraud to higher authorities. Under 143 subsection 12, since the fraud is more than 1 crore, we have to report to central government. Further, under CARO 2020, auditor has to report whether any fraud has been reported to him. Getting it? So in CARO also you need to comment. So 143 CARO and 330 240. If you quote these points, enough. Especially 240, 143.12 and CARO. If you quote these 3, at least enough. Please read the answer once. Just one more question. That's it. Over. While conducting audit of Quantum Mechanics Limited, Mr. Manoj, the audit manager, identified significant payments made by the company for legal and retainership relating to litigation. So he identified so much amount of fees is paid to lawyers. Suddenly, it's an indication. It's an indicator that some non-compliance is there. Indicators of non-compliance is SA 250. The litigation pertaining to Tirunelli manufacturing plant situated on forest land reserve for elephant corridor, which was declared illegally constructed. Oh my God. Company had received a notice to decommission the plant by 31st May, but it has challenged the decommissioning order in High Court and matter was still pending there. Okay, so the company has to remove the factory there. The company had not disclosed any information regarding this litigation in the financials. Okay, the company did not disclose any information on this. So by the way, when the company had received 31st May, it received. During the audit itself, you found so much of fees is being paid to all lawyers. And after 31st March, you found there is an order from the forest department that the factory has to be removed there. So conditions already present on balance sheet date, and it is, it came. So 250 read with 560. This item requires disclosure in the financial statements for sure. The Tirunelli plant accounted for 75% of company's annual production, and the audit team expressed concerns of decommissioning could disrupt the operations and lead to bankruptcy. 570 also. Material uncertainty related to going concern, nothing but. The audit was near to completion. When Mr. Manoj sought advice from audit partner Shalab on this matter, he suggested that no action was necessary as the matter was pending in the court. However, Mr. Manoj feels that situation requires an action from the auditor and to be indicated in the report. Absolutely right. He is absolutely right. If at all court case is not favorable to the company, if at all High Court dismisses this order and tells the company to remove the factory, it affects potentially the operation of the company. It affects going concern issue. So material uncertainty related to going concern. The company must disclose this in the financial statements, and since the company has not disclosed, auditor shall express adverse opinion. So moreover, significant amount of fees paid for litigations and all as per 250. It's an indicator that some pending litigation is, some severe non-compliance is there. Getting it? And further, this non-compliance is evidenced by an order also for the decommissioning of the plant by the Forest Reserve Department. Getting it? So all these situations indicate that the company is having a severe pending litigation which company did not disclose. Hence, auditor has to give an adverse opinion. Please go and read once. Over. That's it. RTP is over. Very effectively we did this RTP. Remaining all questions, you can answer. Ethics question and all is there. That are not straight questions. PSU audit question is there. So PSU audit, one question is there where the auditors have actually done propriety audit, but they are asking, the government appointed them to do performance audit. So, but what they did is propriety audit. So you just have to say that it is not, what the auditors have done is propriety audit, but what government requires is performance audit. So the auditors are not correct. So you need to, that's such a kind of question. Easy questions, you can understand. That's it. Take care. All the very best for the exam.